Compound. Are we about to see a big correction below $200 again before the continuation of its bull trend? Compound is a powerhouse. We're going to look into what it is, why it's such a powerhouse. But from a psychological standpoint, buying, selling, chart patterns, Elliott wave pattern, what's likely to occur next. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading currencies for over 15 years, featured in the best-selling book, High Probability Trading Strategies, back in 2008. And now I focus exclusively on crypto to bring you my knowledge and wisdom to help you make better decisions, minimize your downside, and maximize your upside. So if you liked today's video, like, subscribe, hit the bell notification, but let's dive straight in. So we're going to go into coin market cap. We're looking at compound, the price is $461. The market cap is 2.5 billion. We'll see the price movement. We're going to go into detail in that in a second. All-time high of its price. Let's have a look. Compound has been as high as 900, so it's almost been double what it is today. But what is compound? Well, quite simply, it says it here. Compound is a DeFi, so decentralized finance lending protocol that allows users to earn interest on their cryptocurrencies by depositing them into one of several pools supported by the platform. So we go into the platform, you'll see there's several pools, and basically you can deposit, get some APY. The supplier gets this, the borrower gets this or pays this, and total distribution, it tells you how much is locked. So Compound is a simple protocol, but it's a fundamental part of the whole decentralized finance, and you can build on top of it. You can do very clever things with it. But today, we are going to focus on price action. What the heck are these lines? What is the psychology telling us? What is the market likely to do with high probability? So if you haven't seen some of my lessons before, I'm also going to be doing a masterclass soon on Elliott wave and Fibonacci, because I can only cover so many coins, and sometimes you ask me so many coins and I can't get around to them. So I want to give you the basic tool set so you can do them yourself. So typical markets move in a 5-wave structure, 1, 2, 3, 4, 5, followed by an ABC correction. We always anticipate a minimum of an ABC correction. And then these waves in between actually break down into sub-waves. That's the important premise. And there's decades and decades and decades worth of research done into this, and the markets around 50% of the time tend to unfold this way. And that's the information that we're going to use today. All right, so let's jump back into the chart. So I'm going to do a quick analysis. So I'm going to do the high level, but we're going to go quick and quite fast. So I'm going to go at my pace today. Normally I try and go at your pace. So today I'm going to go, right, let's look at the macro count. I'll say my pace, almost my pace, because I'm going to have to talk some of these points through. So it looks like it's on a wave 1, and then it's broken down to a 1, 2, 3, 4, 5. Keep in mind on YouTube, you can obviously pause, you can watch this in slower speeds, and you can also rewind. All right, this is a intermediate count. I'm gonna get rid of these waves. This basically just gives me context on what I believe, what's my opinion of the market. And when I say market, I'm talking about compound in particular. Down here we see this wave 4, beautiful ABC correction. This is not relevant to us right now, but you can just see that these patterns unfold. A, B, C. This is a micro count, meaning it's a pattern within the wave 4. So we can just put in micro. So you'll see this here, a wave 4 and then A, B, C. So when we're looking at the theory, A, B, C. That's what we're looking at, A, B, C. And when should we anticipate this? Right, that's what we're going to be looking at in the context of today. It looks like a nice wave, 1, 2, 3, 4, 5, and a 1, 2, 3, 4, 5 over 5 over 1. Right, you go, what the heck does that mean? All right, I'm not going to do this. I have fun doing this, so I'm going to do it for the fun of it, but I think it'd be helpful for you to just see these markets unfold time and time again like this. 1, 2, 3, 4, 5 on a micro. So then we got a wave 5 over 5 over 1. Yeah. And at the time, I didn't do it, but at the time we could have projected this. Let's just say we had the data. No, I'm on a tangent right now, but let's just say we had this point of the data. Let's say we was here in the market. How would we look at the market? Because this is powerful stuff, right? You want to project ahead of time, because people are taking, most people are terrible at taking profits because they can't project when's the likely top of the market. And we don't get it always bang on, but you can do these projections, right? Say, hey, look, typical top is 62 to 100%. Look at that, bang. Typical top right there. right? So we know we're heading towards the top of a market, and then we'll do an external retracement. So in a typical wave 5 is a maximum of 1.618, and it's like boom, like way overextended. But then we've got this pattern here, 1, 2, 3, what looks like a 4 and then a 5. So as the market would have unfolded like this at that time, if I had the data, as in we're looking at it live here, I would have done the same thing that we did down here, but up here. Again, I'm going to cover this in my masterclass in a bit more detail. At a slower pace, like the theory, right? So I'm going to go here. We're going to measure this wave 1 to 5, so 1 to 3 projected from before, and there's 3 ratios. Typical minimum is 38, most common is 62, and maximum is 100. But we want to cluster. So what we do is we do an external retracement. I went against my word, didn't I? I'm not moving at my pace, but I think this is valuable information. So I'm going to share it. If you don't like it, you can kind of skip forward. There might be, I think there's going to be some timestamps in this video. So if you want to go straight to the meat, then we know. So when we get an external retracement, right, this is what happens. Look at this. I'm fascinated by this, but the markets unfold, especially crypto. It's really susceptible to the psychology. It's so raw because it's such a global market, such an infant market. We'll go, look, this external retracement is the minimum maximum here. So this is an outlier. So I would have got rid of this ahead of time. And we've overextended amongst this 100%. So we've got this zone over here. And we could do some other time analysis. We could do some basic time analysis. This is in hindsight, but I'm just going to show you, you can measure wave 3, project it forward from wave 4. You can see it's in that zone. There's a few other things you can do as well. You can measure this wave 1, project it forward from here. Measuring waves against waves, and it gives us valuable insights. So we've got this time and price zone over here. Now this is not the point of today's data, but it's almost like getting confidence in the analysis. We've got this zone over here, and then we can add in a momentum indicator. Let's use the stochastics RSI. We go, okay, let's do a faster one. I know this one's in hindsight, but then we're going to look into real-time data. We go, okay, the next bearish reversal on the momentum when the blue line goes below the red, and we're in a price zone, we're in a pattern zone, and we're in a time zone. So then if we were trading this short or we was looking to take profits, we would do a couple of things. I would personally, when it's in this extreme zone, I would just trail my stop loss, but also a buy order, or a sell order in this case, on a 1 bar low. So you just look at this and go, right, on this 1 bar low, especially after the next reversal. So let's just see how it unfolded. Boom, that was the next day. So it's like boom, and it was, and then it moved, then it started moving, right? And then probably at this point here, definitely we say, okay, we can be confident that that's the wave 1 high, and it's in that time pricing zone. So let's now get rid of this, because now we're going to get it up to date to where we are today. Where are we today? So at this point in time, I'm going to go back to the line data because it's just cleaner for you to look at. Right? If we are confident in the market, let's get rid of the indicator. And we go, right, we are confident that this is a wave 1, 2, 3, 4, 5. What typically follows a wave 1, 2, 3, 4, 5? Well, it's a wave 2. So let's just go back to the theory. Look at this. A wave 1. Yeah, want to focus on this. I just want to get it like this so it's really, really clear. Because we're looking at a micro picture here. This is textbook Elliott wave theory, right? And it applies to the markets, and it's often around 50% of the time that it's clean and clear. 1, 2, 3, 4, 5. So that's where we are now. We've had this initial move down. We should always anticipate a minimum of 3 waves. That's just the most common. That's what we mean by probabilities. What's the likely outcome based on what's likely to occur? No opinions here, just facts and figures, and we go with probabilities. So what I know is I'm always anticipating a minimum of 3 moves, right? A minimum, right? We go move 1, then we have a reaction, and then we have a finish of the correction. It can go more complex, but that's the typical that we're looking for time and time again, right? We can also ahead of time say, look, this whole movement, how long has it taken? So if we take it from here, which is the official low on November 3rd, 2020, and project it here, the minimum wave 2 correction to be 38.2%, 50% is more common, and then 100% is more often than not the maximum. So we've got these time zones. So we kind of got these dates on saying, right, the correction should go beyond July 21st. And now this is way back in May, right? So we're going here a couple of months of sideways to down. But more often than not, it's actually August 14th to finish the correction as a minimum. And I would always wait for a correction to go past 50% before I'm confident that it's reached. Because now what we're going to do is a price projection or retracement. Retracement just means, again, I'm going to cover this in detail in the masterclass, so I'm covering it quite fast here. Let me just zoom in like this. Taking this low to this high. So we're basically doing this. I'm kind of doing a mini masterclass here, aren't I? Geez, here I was thinking I was going to get this in 5 minutes, but yeah, I kind of get carried away. We're basically measuring the price up and we're retracing back down. That's basically what we're doing. And then we're retracing back down. And this line here represents 50%. That's the normal typical minimum correction. Then it's 62% and the typical maximum is 78.6%. Right, so that's price, right? And I like to have it here. So now we've got price, but we've also got time, right? We've got price and time. Very broad, right? Very broad. Now let's just let the data unfold. Remember, how many waves are we expecting? Minimum? 3, right? 3. So let's have a look at now. Let's just get the data up to date. So we've had this amazing move to the downside, right? But what does that look like to you? That looks very impulsive, right? Not even though it's hit this price, right? This price zone, I would not be confident that this is the end of the correction. Why? Because this is not a corrective structure. It's very impulsive and it reflects patterns of a wave A, basically a wave A, right? So I'm now looking at this going 1, 2, 3, 4, 5 of a wave A, right? So straight away I'm thinking wave A. If I pull up the momentum indicator, maybe we can go on a slightly slower indicator, which is, let's just try this setting. Maybe even a slower one. Basically what I'm looking for is something that smoothly picks up these lows and these highs. So this one here. So the next bullish reversal will kind of probably be there's a bit of a lagging indicator here. Well, they're all lagging, but this one's going to lag a bit more, but it helps. So we go next bullish reversal, bang. Here we've got a convergence, meaning price has gone lower, momentum reversal has gone higher. Let me just do this here. Gone higher. That's what you call convergence. So now we've got pattern and price, but this for me looks like a wave A, right? But let's just let it unfold. We're always looking for a minimum of 3 waves. Now, what we're looking for, so we're now relatively confident that we can go, let me just type it in. Oh, I'm looking for this one. Relatively confident this is a wave A. What should we anticipate for a wave B? Well, I'm going to just remove this for a second. And we'll put it back in a second. Because now, right now, even removing this for a second, right now, at this point, the actual data is more about this next part of the wave. What typically happens for a wave B? Well, believe it or not, a wave B tends to break down to 3 waves also. Wave B is a correction to the correction. Yeah, correction to the correction, right? So we anticipate a minimum of A, B, C. And it's similar to how we anticipate this wave too. So we actually now do a retracement, but the other way. So we're going to measure it down. We should anticipate, I'll get this right, bang, right there, right there. Anticipate a minimum of 50%, but also a minimum of 3 waves. How long should it take? Again, minimum of 50% in time. So we just measure this. We go click, click, bump, bump. There we go, right? Minimum, typical minimum, maximum, and then absolute maximum tends to be 1.618. So now we can let the market unfold. Let's just get to today's data, right? Boom. Now we're in today's data. So what are we anticipating happening next? Anything can happen in the market, right? So we've come close to the 50%, but we haven't reached it. We are in the time zone. So what I would project is where we've passed this 50%. We're in this other time zone. I would actually look at this and go, it looks like a wave. I'm seeing this as, I'm okay being wrong. It's not about being right or wrong. It's about having valuable information to make a decision on. A, B, and we look like we're forming some type of C. That is micro, that's fine. Perfect. Bum, bum, bum. And now what I also do is, because we've exceeded or come close to this high, we can be confident that this is a B. So now we can do some price projections for a wave C, price and time. So we're going to measure basically this wave A, project it forward from this wave B. And the typical wave C is absolute minimum 62%. Most common is 100%. And then extended wave C's is 1.618. But I would go with these two. This looks highly probable. Let's get rid of this just to clean up the chart. And then lastly, we'll just do an extra bit of time analysis, where we're going to measure, I just want to see, yeah, I'm going to measure how long it took for that to form. And then we can see that it's past that point already, so that's not going to be that relevant. So we know we're in this zone. What I'm seeing here is a 1, 2, 3, 4. So we're going to probably see a wave 5 up last leg. Let's just now go to a quick, faster indicator. Oh, not this one. We want the 8 by itself, this one here. Yeah, the next bullish reversal, next bearish reversal will probably coincide in this region. And we've got two zones. Bump, bump. So I'm just showing you this because there's method behind the madness, right? We're just picking out numbers and saying, hey, we think it's going to be this. More often than not, corrections to the corrections will unfold in 3 waves, like this: A, B, C. Either here or here. Now, as the momentum changes, we will get a picture here. But what we can deduce is once this low, let's just zoom in here. Look at this, right? Wave C's tend to break down into 5 waves. So what do you see here? Well, I see here is a wave 1, a wave 2, a wave 3, some type of wave 4. We're not confirmed that it's the end, but let's just say it's thereabouts. We can project forward now ahead of time, especially when this movement to the upside happens, as it did before. We can go, okay, let's just assume that's the low made. I know it can go deeper. There's typical price zones for wave 4s. Now, would you like to know what they are? I'll show you. The most common one is of wave 3. Wave 4 is 38.2%. And you can see it's right in that zone, It looks like a type of an ABC, and we're not too fussed about that right now. What I'm going to really focus on is projecting on a micro level an 1, 2, 3, 4, 5, end of a wave 5. And then we are also going to look at, we've done that already, yeah, that's the last one. So that's, yeah, there's two that we can do. Let's just do the 2. Now we're up into, right up into there. We're assuming this is the low. The most common is 62%, maximum is 100%, but the absolute minimum is 38.2%. Right? We want to be aware of that. But also, wave 1 and wave 5 have a relationship, and they often equal each other, and it's the 100% that I want to be aware of, which is this. So now we have this price and time cluster zones. They're really, really clear, right? Got this zone and this zone. So if this is the case, let's just jump into a weekly chart. Look at this as well. On a weekly chart, the momentum is also overbought. Like it's right up here, very, very high. So when the daily on the lower goes low, up, and then bearish reversal, it'll probably coincide with a bearish reversal over here also. So then you got multiple pieces of information that says, hey, looks like, even though it looks bullish, like, it looks like, wow, this is like, starting to take off again. It's gone from $200 to, $500, currently sitting at just under $500. But now we've got a bit more insight into traditional, most typical psychological chart patterns based on theory. Remember, ABC. But here, it looks like this is a wave A. And then this looks like it's forming a wave B. Right? Now you got a bit more context because of how chart typically, buying and selling, how buying and selling behavior typically unfolds. So what I'm anticipating next is what I began the video with, is once this correction is complete, I'm anticipating a third leg to the downside to complete the correction, right? And then we can bring back up what we did at the beginning, which was the retracements. I know we're going to have a lot of lines on the chart, but hopefully it makes sense to you now because I've spoken through all the steps. And again, 78.6% is the typical maximum. That's the one that we need. So we might get like a double bottom, meaning that it might bounce off this region. And we also, again, I'm forecasting here, but if we measure this A and this wave B ends up being around here, you can tell that it's literally off the charts, the 100%. So 62% is going to be more common. Look at that, right into that zone. So we might get like a an irregular, it's irregular or an ABC flat, meaning that we don't exceed the wave A, so we'll get into this zone, but into the $200 zone. And we can also just project, let's just get rid of these. This information is relevant still, so we can leave that there. But what we want now is, well, I guess this is still relevant as well. Yeah, I'll just change the color. So the last thing I want to do to wrap up is time. Typical is minimum 50%. We've exceeded that already. And then the most common is 100%. And then what we can do is say, if the wave B top is made, we can measure wave A and project that forward from wave B. Again, wave B hasn't been completed yet, but let's just say it was around there. We will have a zone of price and time around this zone here for a correction to complete. Is it going to unfold that way? I have no idea. You know, that's what the probability will state, right? But we need a bit more information. We'll also be open to the market doing whatever it's going to do, and we'll react in kind. But now we've got some valuable information. Hopefully you found that really, really valuable. You know, to summarize, we got this nice wave 1. Looks like we formed the initial part of a wave A over 2, B over 2, and then we're due. Not yet. I think we're going to see a bit more upside movement, and then a correction to the wave C, and then we should see a low. And if that occurs and it unfolds this way, then we can start projecting the next part of the market, which typically tends to be a wave 3, which will be very, very bullish. And that, my friends, is how you do Elliott wave, Fibonacci, momentum, and we did some time analysis there as well. But there's the theory and how we're seeing the market unfold, because it's great to see when the practical and the theory marry up. So how did you find that today? You know, do you believe the market is going to continue the upside, or is compound due a correction? So you can write in the comments, bull or bear. You know, is it going to go down, or actually is it going to just continue up? What do you think? Let me know if you like today's video. Like, subscribe, hit the bell notification. Let's finish on. I was planning on making it a 5-minute video today, but there you go. There you go. What can I do? So Think and Grow Rich. Let's finish on chapter 12. End of chapter 12. There's a little quote. It says this. I like this one. Napoleon Hill, by the way, book I used to study when I was a bit younger. So all individuals have become what they are because of their dominating thoughts and desires. All individuals have become what they are because of their dominating thoughts and desires. So I'm saying thoughts are powerful. You know, it's like a magnet. So we're going to be aware of your thoughts, and you can take control of your thoughts. Buddha said it nicely. You and your world are composed of your thoughts, and the wise man or woman controls their thoughts. All right, I'll see you very soon. Have a great day, and compound. All right, let's see how it unfolds, and keep an eye on this one. This is textbook stuff, but, you know, again, we're only working with probabilities. See you soon.